Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we'll look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature for this second day of August 2012. It's about 1 p.m. Eastern Daylight Savings Time. Looking at the last print of 1353.75. What an impressively lower session we're having today. The market's down 17 points, as you can see, 16 3/4. What a beautiful gap to the downside, a beautiful gap fill right to the test of the underside of our trend following support resistance. Now this of course is the intraday chart, and these are, if I failed to mention, our proprietary indicators, our intraday dynamics, how we use what we use to gauge the market and its likely direction. And as you can see, over the last few sessions, as July has come to an end, August has begun. Here's August 1st, 31st, and 30th. Just a supremely quiet session. We had a beautiful day last Friday. Our portfolios participated nicely. In fact, MSA UDT, I believe, was up about almost 30%. So it was a nice day all around last Friday. But kind of a quiet week this week. Today, of course, is Thursday, and we're looking at a nice move down following yesterday's Fed announcement, FOMC meeting. As you can see, the usual fireworks, but we rarely trade around that, particularly from a discretionary basis. We always wait for the post-open post-early session of the following day, which puts it around 10:30 Eastern Daylight Savings Time, Eastern Time. And so lo and behold, that would be right here. And what a beautiful opportunity. Okay, we've had a gap. We've filled the gap. We're testing the inside of the trend. We're through FOMC. Let's go short. Now, of course, we didn't have any discretionary short exposure. We're already short in the firm account. Aurelius and and Valerius are both short. And since the demise of Strategy Runner, we've moved over to another third-party automation provider, and a new portfolio that we've been testing actually for about a year in anticipation of the at least potential for the demise of Strategy Runner. Have been testing a portfolio, Valerius. We'll look at that in a second. And Aurelius is the firm portfolio that we're actually going to be offering as well. And so those are a couple things that have been in testing. Not really testing. Valerius was in testing for the last year or so in anticipation of the of if something were to happen to Strategy Runner. And of course, SR, as you know, as a lot of you know, was bought out by MF Global right about a week before they announced that I don't know, $1 billion was missing or so in client funds. Some crooks, that's for sure. And so there went SR, but with change, all good things will come. And so we're actually offering you all some pretty impressive things as well. So I'm going to go ahead and continue to talk about the market. Here we have this bearish, bearish, bearish. Red means bearish, green means bullish. Obviously, you can see last Friday, all green all the time, and we get a close very near the high of the session. Today, it's been the antithesis, all red, all red, all red, all red. Not Gloria, but a bearish market. And as you can see, the beautiful retest, simply just a beautiful trading day for Thursday and for our positions. In fact, we can go. We'll look at that in a second. So moving on, we're going to switch over from looking at the intraday to hopefully looking at the daily. Do a quick analysis of the daily market, and there you have the mini S&Ps on the daily. A beautiful, nice move down. We've had some nice, arguably higher highs, but some nice higher highs. Higher high, higher high, higher high, arguably higher high. Higher high. So the market has been in an uptrend. This beautiful inverted HNS setup has really come to fruition. We definitely expect to see, as we've been informing our clients, 1400 before 1300. Not sure when exactly we went to officially bullish. I believe it was around 1320, 1340. We'll have to look back in the notes. And from an official market timing perspective, but as you can see, we are and do remain fully and officially bullish. From a momentum perspective, short-term bullish, waning a bit. Intermediate-term neutrality rules the day. In terms of directional movement, short-term bullishness now back to neutral, given the cross waning a bit, intermediate term neutral. So the directional movement of the market, the momentum of the market, both screaming neutrality. But that's okay. Moves can be still had in neutrality, and we definitely anticipate going to the level of 1400, and depending on market dynamics, maybe even 1450 to 1500. But as you can see, we are fully and officially bullish. If we get a close below here, this will move to gray status as 20% a measure of 20% influence on the market. But again, we were actually anticipating. We'll go ahead and see if we can't pull that up. That should be right here. There we go. So we had been anticipating. This is our report that goes out to our clients, and we had been anticipating. Actually, we mentioned it today. We expect the ES maybe having some difficulty here. This was a quote from the prior day, and we were looking for a pullback. There we go. Difficulty here. Thus, a pullback to 1360 to recharge would suffice. At the very least. Valerius lost 200 yesterday. MSAUDT didn't trade, and that, of course, the market is now at 1350. Came in the pre-open this morning. The market was at 60. However, given the ferocity of the overnight drop, we're likely to give the market till 1340 to 1350 before issuing more bullish indications. That's add to any bullish exposure. Meanwhile, we remain fully and officially bullish. Let's see, when did we go officially bullish on the market? Remain officially and fully bullish. Officially and fully bullish. Officially and fully bullish. At the very least, switch. Blah blah blah. So I'm not sure where we moving to official bullish. Here we go. 1346.75 on the start of July. So there we go. Right around here. So here's where we went to officially and fully bullish, waiting for this setup to come to fruition. Reclamation of some key trend following measures. So 46.75 is where we're bullish. Pretty neutral. We may have actually gone unofficially bullish on this close above the high of the low day, and definitely went officially bullish on this move here to reclaim the trend. So that's a quick look at the intraday market. As you can see, it is lower, and but overall the bullish scheme remains. So definitely want to favor the long side, particularly in this month. We are likely to be officially bullish throughout August and possibly throughout September. We'll wait and see how that goes. So quick look at some of our models. MRCM cutting it up, simply slicing and dicing the market. Look at this beautiful short setup. Gave it back quite a bit. We should and probably will develop a derivation that locks in these gains, scales out, whilst keeping the overall methodology unchanged and simply enhanced. But look at that, buying profit, selling profit, buying profit, shorting again profit. That's 940. That's $2,000 right there. Just and this is traded in Valerius, and there's a position of this in Valerius. So that's we'll see how the equity curve's doing. This is after slippage and commissions. Green dots all the way over $100,000 per individual contract. Not too bad. Taking a look at the sentiment picture, the Russell here, not the Russell, but the sentiment picture, the equity call value ratio, extreme complacency yesterday. What a shock that we're getting a sell-off. Extreme complacency. In fact, you saw this level of complacency right here. We had mentioned on 7.5, and of course you get a nice sell-off. In fact, it's continued. Lower high, lower high, lower high. Pretty impressive for the small caps that have been underperforming. Now, yesterday, we get extreme complacency. 785. Where are we now? 765. So in a couple of days, $2,000 per contract lower because of this extreme complacency that we're seeing in the market. We're getting some favorable levels of fear, so that's okay for the bullish side. But anytime you see that, you definitely want to be wary of the long side. The VIX just simply choppy, just simply chopping around 15 to 18 or 15 to 20. No real indications on the VIX. It's above the midline. That's about all you can say. So we're going to go ahead and keep it moving, and we're going to take a look here. We're looking at the EMDS. Nice little couple of winners. Nice winner and one not so nice loser. take a look at the equity chart there. Wow. No green dot, but nice 100 grand almost, $10,000 maximum drawdown. And so we're taking a look at the EVR3 TSR. No trades. Take a look at the performance report. Beautiful. Beautiful. And of course, anything that we've ever developed is always non-optimized, non-curve fitted. That's why you continue to see. That's why we've been around for almost 10 years now. Established 2003. So there's a nice $40,000 on a $4,000 maximum drawdown. EVR3 AC TSR. No real trades. $100,000, Charlie. $100,000 for a maximum drawdown of $8,000. No trades. EVR3 filter. We'll take a look at that. $111,000, just a $5,500 drawdown. $864 every time you place a trade. See if we can scroll back and see anything. Wow. The puppy hasn't traded in a while. Last big winner was last year, but you know that's certainly okay. When you have 50+ trading models and you're in constant development, Kaizen, continuous improvement, you can definitely wait around for just the right spots. So there's R60F. We'll take a look. No trades there. That's odd. $70,000, just a $4,400 maximum drawdown. $152 every time you place a trade. Loss, winner, and small winner, winner, chicken dinner, loss there. Go ahead and EMDS we took a look at. DVR3 VSR, loss, no real, nice loss there, or nice loss. Winner, 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 winner. So that's not too bad. We'll take a look at the equity. As indicated, as to be expected, you can expect there's $85,000 with a $5,000 maximum drawdown, $300 every time you expect to place a trade. MRSC MPTL, $90,000, just a $6,000 drawdown, $750 every time you trade one contract. Closed out a nice winner. This is traded in Aurelius, and a lot of these are traded in Aurelius actually. So there's the R30C. And R30B, one loss. R30A, getting out. Heading for the exits right before we had that big drop. What a beautiful exit on the long side. And unfortunately, extremely regrettably, whipped out right here on this move before this huge up move, particularly R30A. Whipped out right before this big up move, and that was a little discouraging. We'll take a look at the equity curves here, as we do every week. $100,000, maximum 3 contracts held, just one there, so usually just one. R30B, $50,000, just $4,000, $300 every time you place a trade, usually just one contract, and $27,000 for R30C. EVMCM. Take a look at that. $163,000, $16,000 drawdown. So you're paying for the privilege to certainly with the drawdown, but not too bad. As you can see, almost a green dot. We'll take a look and see if there's many trades. Nope. I think there were some trades just the other day. Huh? That's strange. Just had a little blip there. I don't know what that is. I thought there were some trades the other day. Interesting. CBR. Take a look at that. There's one winner. Almost a green dot. Not too bad. ISRD. Another green dot. Beautiful. Just screaming. $100,000. $250 every time you place a trade. More green dots. Again, we should create a green dot portfolio. We've often talked about that. Unfortunately, got out right before the big up move, so that was a little discouraging. Didn't really capture in Aurelius. I think Aurelius made about $6,000 last month or so, somewhere around there. It's 50. You have a $50,000 aggressive version or the $100,000 nominal version, the normal version, and should have made about $12,000 last month, but finished only about 6 or so. So we took a look at that. There's the actual EVR3 again, so what this says is you see 3 winners, winner, 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 chicken dinner, but no real trades. What that means is we're gearing up for some pretty impressive trades. There's some green dots, as you can see. This all goes back 10 years. This all goes back. These all go back a decade. Here's the ES30MX, not doing too good. Bought a little bit, then buying again. So that's just not looking too good there. But over time, looking pretty good. $400,000 on just $31,000 maximum drawdown. Trade close to trade close, you'd actually have to endure more. ES30M, about $250,000 and $25, but you definitely have to endure a lot less. Peak to valley, $24,000 trade close, so not bad there, but still, as you can see, kind of the same scenario, getting caught in along here. See where we are. And I guess that's about it. Our 2K day trader 60, one loss there. Not too much trading going on, so we'll go ahead and minimize that. And we're looking at the Aussie. Aussie dollar just continuing to scream higher. Again, you're looking at a decade of trading. Green dot. There you go. And so we'll look at the EVO YM, close to green dot. EVO EM coming down a little bit. Good time to get involved. MCM, EVO ES, EVO EM active, EVO TF active. Beautiful green dot there. I think that had a really nice trade. Yeah, look at that beauty. Look at that beauty. Look at what was that? What was that? Look at it was from Romancing the Stone. The guy with the alligators. You guys write in. Tell me what that was. He was look at that snapper, would you? That came to my mind. So there you go. EVO original. Not really trading, but the EVO TF active, beautiful right there. So we're gonna go ahead and minimize that. So let's look at some of our models, and there's a blank screen. So we'll just quickly pull up maybe Valerius. So here we go. So we had talked about this. So we have our performance numbers out, and we have a few changes, upgrades, additions. MB250 is now the MB500, 500K. The Aurelius, a 50 or 100K portfolio, has been added. This is our firm portfolio. MB100 is now MB150. Valerius is our new tracking model. Has been added to the site. And so you can click there, and as you can see, we talk about Valerius here. All for just $1,888 a year. You can trade Valerius. It's made in 10 months, I believe, 36,000, and this is actually given the two current short positions, like almost 40,000 with today's gains. This was yesterday, so this is almost 90,000. Started with 50,000. 80% in a year, and for just $1,888 for a year. What's that? A little over $100 a month. It's just unbelievable. It's inconceivable, the value that you get. So there's Valerius. You can take a look at that, and that's how the this is a third-party automation and tracking. And you can see the performances. It's been tracked since last essentially November. I think it was last November 1st. I'm not sure what that is. 1% November, 20% December, lost 12% January. Shocker. 1.1% drop in February, 12% March, 12% April, dropped 10% in May, 22% in June, 3% July, and already up as of yesterday 1.7%. There's the equity curve, and this is what we've always told our clients. Always add exposure or start a new portfolio on a drawdown. It could be here, it could be here, it could be, if you're really lucky, it could be here. Rarely do you ever want to jump in like right here, or right here. In fact, one could argue not even here, but you could also argue not here or here. So you definitely want to wait for a pullback to get the optimum exposure. We've always had clients, oh wow, look at this huge run up. This is when I need to start. And that's what you have to endure starting out. So you want to just look for a nice, beautiful equity curve like this. This was a little bit execution during testing. Got the move up, $40,000 to $60,000. gave back 10, made another, what is this, 50? Made another $20,000, gave back a little more than 10, and now we've made, what is that, 57? So now we've made $25,000. This is after commissions, this dark blue line right here. $27,000 after slippage and commissions. So yeah, for instance, this is just it's not a snapshot. This is up $1,800, and this is up 1,200 right there. $1,800 and 1,200 for these positions. These are open positions for Valerius right here. This was as of yesterday, so we can go ahead and take 1 second. Okay, all right. So we're talking about Valerius and almost $90,000 in capital. Now you can participate in this. What's interesting is with full automation, or and for just $1,888 a year, yearly list price $29.99, 12-month special $1,888. You actually save $1,111. So that's pretty impressive. That's a pretty impressive deal right there. You trade 7 elite trading models, $1,888 for the entire year, and you just saw in less than a year you're making $30-some thousand or so, and the fee that you pay to do that is just $1,888. I'd say that's a pretty good deal. I would believe that's a pretty good deal. So there's the equity curve, there's the track record. And so we're going to go ahead and look at, here's Aurelius. This has been added, so that's been, Valerius has been, there we go. So there's Aurelius. This is the firm account, so this is going to cost you a little bit more, given this to get on board with the firm account, about $10,000 for the year, which is still a bargain, given that this portfolio has made $52,000 in cumulative, $58,000 as of last month, as of a couple of days ago. Made about $6,000 last month, almost 17 in June. Had a bit of a struggle in May. It's pretty nice gains for the first quarter. This is a 50,000 aggressive account, so for $10,000, you can make $58,243. And these are actual account returns. So as a matter of fact, you can see. There's the account statements starting with 97,188 in, what was this? I have to go up to April of 11. So that's what the bounce, so actually started, I guess, May 1st. There's $97,000, and you go all the way down to 155,431 as of July 31st, 12. So $58,000, and there's the actual track record. $58,000 is you pay $10,000 to make $58,000. So basically 100%. And that's pretty much what we target, 1 to 200% returns. And so there's 100% after, that's net of fees. So $10,000 puts you right at almost 50%. So not too bad. There's Aurelius, $10,000. Here's the MB 500. All you have to do is click on the report. That should probably be, that's the trade list for the MB 250. So click on the report, and it should come up. There we go. And it's not going to look like that. So $4 million. $300,000 maximum drawdown. Now that's peak to valley. That's not trade close to trade close. So trade close probably be $200,000, but it's a $500,000 portfolio, $500,000, and that's aggressive. You should probably start with about $1 million in risk capital. Of course, we're speaking. $500,000 has been deducted just for a slippage and commissions. That's not including our fee, which on this portfolio, this trades 86. Can trade 86 contracts. Excuse me. There's your equity curve. Beautiful. Over the last decade, non-optimized, non-curve fitted, and these are the models that we use. There's a lot of ones that we talk about. So look at all these EVR3s that we just went over. Grind, ISRD, AT, MILTF, MRSEM PTL, MRSEM, Arthur. See, there you go. These are all the models that we look at every week, and this is how they perform. So, equity graph. There you go. Look at the drawdowns. Should be down here. No, I guess it'd be right there under drawdowns. So here's the, look at that. That was 2008. So save the financial crisis, the largest we've seen ever that I know of. Well, obviously there's market crashes, but in terms of the what happened to the U.S. economy, obviously sent us into the Great Recession, which is likely to be the Great Depression. We've had what, a triple dip now in the economy. I just kind of laugh when I see all these people looking for quick rebounds, which makes what we do that much more valuable, because I believe, as I've mentioned oftentimes, it's just going to be a trader's market for at least a decade. We're going to at least need a decade to work through these things. People are talking about single dip, and obviously you're at least going to get a double dip. Now we've had a triple dip, and it's just going to take a lot more. But save that, you have $300,000. You have just $180,000 couple of times drawdowns that you would have to endure. But the average drawdown is more like $100,000. That's like 20% on a $500,000 portfolio to make $4 million over a decade. So that's after slippage and commissions, and not after our fees, which are $68.88. Retail price $9,000. $68.88 is the yearly special to trade 86 contracts, make $400,000 on average over the last decade. You're just paying us $7,000. Pretty good deal. PR 100. So you can go ahead and look through all these portfolios. PR 100, 1888 for the year. So we've moved from quarterly pricing to essentially yearly pricing. EVR 3 portfolio. Let's take a look at this MB 150. We'll pull that up here. Just open that. See if that comes up. Might take a second. It's kind of a sizable report, and as is this video, and I do apologize, but last month was kind of a vacation month, and that's just really not coming up, so we haven't had a video in a while. A lot of things to talk about, and so maybe we can refresh it. I'm not sure. It might just take a minute. So we can go back here. We can just close that. There we go. So this is, what was this? I don't even remember. Oh, this is MB 150. So there you go. So let's take a look at the number of contracts. 46 contracts. That's typical for an MB portfolio. Around 50 contracts for a $100,000 portfolio. $150,000 what we recommend to start. 70,000 peak to value drawdown. We can look at the drawdown graphs actually. Look at that, 70,000 again, a couple of times actually, but both in '08. If you look at normal market conditions, the average drawdown is like $28,000 on a $150,000 portfolio. What's this line right here? So these are the normal extremes, 35%. So 35,000 on a $150,000 drawdown on a $100,000. That's just exciting. Only 20% drawdown essentially for a portfolio that's going to make you almost $2.5 million over the last 10 years, last decade, after slippage and commissions. And our fee for this, $200,000 a year, $200,000 is, I'm not sure where that came from, so I'll go back. Where did you go? There we go. MB 250, $48.88 a year. So on average, you're making $200,000. Our fee is $48.88 a year. So really, not a bad deal. So if you guys have any questions, again, it's full automation. Anything you're interested in, or what's interesting is you can get these trades delivered manually to your email now, to your cell phone. And we had to kind of abandon a lot of our self-directed traders 7 years ago when we moved over to SR, because we're no longer sending out email alerts to IMs and texts and all that, but now you have the ability to get the trades right to your cell phone, right to your email, right to your messenger if you're interested in that, or just do it with full automation. The choice is actually up to you. If you guys have any questions, go to the website, chat with the support team live, or shoot us an email to, as always, admin@MiniAnalyst.com. Hope you have enjoyed the video and the update, and we'll see you next time.